just because it hasn't started yet? Like, what's so wrong with it? Should be live? Oh, never mind.
Good morning and welcome. I'm Fred Kemp. I'm President and CEO of the Atlantic Council. It's a great pleasure to welcome you to the official launch of the report Beyond Data Breaches, Global Interconnections of Cyber Risk. Organizations like our own, companies like Zurich will often say, this is a groundbreaking report, and you'll look at it and say, really? I think you'll look at this one and say, this is a groundbreaking report. The cooperation between Atlantic Council and Zurich Insurance in this has been a template for the way that these sorts of organizations can work together in the public interest to create knowledge and to reduce risk and to understand risk. The report is a result of a year-long effort between our two organizations and is a project that encompassed meetings on 4 continents and consultations with cyber experts and risk professionals across different industries. It all started with a brainstorm between members of our two teams with the Global Chief Executive of Zurich, Martin Sen, where we started thinking about where does risk lie? Where is the aggregation of cyber risk? And we even came up with a term at that time that we were thinking about, which is there such a thing as cyber subprime, a surprising risk that would be large in nature that we just haven't thought enough about. This report doesn't necessarily say it exists and this is where it is, but you'll hear today about our musings and thinking about that direction. The relevance and timeliness of the report can't be understated. Data breaches are today's top concern and a serious risk. 2013 was the worst year thus far for data breaches, with 740 million data files potentially viewed or stolen worldwide. The Heartbleed bug exposed this week, affecting global email providers such as Gmail and websites such as Facebook and Yahoo, is another example of the scale of our vulnerability to cyber, to data theft. But governments and forward-looking organizations need to take a holistic view and look beyond the issue of data breaches to the danger of global shocks, instigated and magnified by the interconnected nature of the Internet. The Internet of tomorrow will both initiate and amplify global shocks in ways for which risk managers, corporate executives, board directors, and government officials, in our view, are not adequately prepared. Currently, cyber risks are being treated by risk managers across a variety of industries in an insular and narrow fashion that neglects wider systemic risk. While there is a greater awareness of cyber risk in general, IT managers and their executive boards still hold too poor an understanding of their data assets. We at the Atlantic Council believe that needs to be pushed ever more into the C-suite, because it really is a C-suite issue. It is a top of the company issue. These include, and the data assets and the risks include the myriad ways risks are aggregated through their relationships with counterparties and partners, outsourcing, supply chains, connections to disruptive technologies, reliance on upstream infrastructure, and external shocks. And that brings us back to this subprime notion. This myopic view of risk is precisely the same view we had leading up to the 2008 financial crisis, where a seemingly isolated failure in one area of the U.S. mortgage market cascaded into wider society, resulting in catastrophic damage, causing bank failures and calling into question the viability of the euro. We're certainly not predicting that sort of thing in the cyber world, but similarly, cyber risks are not self-contained within individual enterprises or anywhere else. Our vulnerability stems from our reliance on the Internet for real-world purposes. And as we have Internet everywhere, and as Internet becomes more and more running everything in our lives, or connected to everything in our lives, that risk continues. The vulnerability is compounded by our inability to comprehend and model these vast, complex linkages. Ultimately, Systems where one set of actors have an asymmetric advantage year on year and decade after decade will hit a tipping point where predators will outnumber prey, and that's our concern. Moreover, as we have seen in the recent Ukraine-Russia engagement, the use of cyber tactics in geopolitical conflicts will only continue on an upward trend. The massive data breaches at the U.S. retailer Target that were traced to intrusions through a subcontracted refrigeration and heating company only further illustrate how lax security controls external to an organization, but yet directly linked to that organization, can have very troublesome consequences. Fortunately, there are several prudent actions which will help organizations and industry leaders expand their risk horizons, rethink this whole picture, and shift resources from purely prevention to resilience. With this evolving cyber landscape in mind, we can't think of a better time to build on our existing foundation of knowledge and encourage enterprises to adopt standards and procedures that will not only protect their assets, but potentially prevent a disastrous cyber accident from rippling across the globe. At the Atlantic Council, we've been addressing many of the issues related to disruptive trends, and we call it the Cyber Statecraft Initiative instead of, say, Cyber Risk Initiative, because we're also taking a look at who can answer these sorts of questions, at what levels, with what sort of international organizations or private sector institutions. Through global engagement and thought leadership, our Cyber Statecraft Initiative focuses on international cooperation, competition, and conflict in cyberspace. Also at the forefront of our efforts is our Strategic Foresight Initiative, exploring critical questions of emerging technologies and exploring their effects on global challenges. The Strategic Foresight Initiative focuses on global trends, implications for today's policymakers, and then building on strengthening strategic foresight approaches. Both of these initiatives work to inform policymakers about the future challenges while doing groundbreaking work on shaping the responses to current challenges. How all of us manage this juncture in human history will play a large part in the future trajectory of the global system, and the Atlantic Council is determined to be an active participant with incredibly strong partners like Zurich Insurance, committed to working with its friends and partners in deliberately shaping the course of our global future by understanding the risks more clearly and then proactively addressing them. With that, I want to thank Jason Healy, the director of the Cyber Statecraft Initiative at the Brent Scowcroft Center for International Security at the Atlantic Council, for his leadership. Since its inception under Jay's leadership, the Cyber Statecraft Initiative has become a hub for practical, relevant, unfolding solutions and challenges to cyberspace. Like so many people at the Atlantic Council, he's had private sector experience, including Goldman Sachs, and he's had a great deal of government experience working on protecting infrastructure at the White House. Jay's mission here at the Council is to demystify the overlap of traditional national security and cyberspace, and we're grateful for his leadership and expertise. Before I turn the floor over to Michael Kerner and introduce him to give opening remarks, I'd also like to express my gratitude on behalf of the Atlantic Council to Steve Crocker, one of the inventors of the Internet and board chair of ICANN, Catherine Mullican, Senior VP at Zurich North America, Dan Reardon, Chief Executive Officer of Zurich in North America, Francis Rose from Federal News Radio. I know the name of your show, In Depth with Francis Rose, but I was struggling for FNR for a minute. And of course, Michael Kerner. Michael is currently the CEO of General Insurance at Zurich Insurance Group and oversees property casualty coverage. Since joining Zurich in 1992, Michael has gained extensive experience in different specializations in the insurance world. In short, he's really one of the best in the business. His substantial contributions to the field are well known. He was honored by the Spencer Educational Foundation for promoting the field of risk management and insurance as an attractive career option for young professionals, and for providing a great deal of scholarship funding at 19 schools nationwide. As a thought leader in the insurance industry, Michael is frequently quoted in the media for his expertise, and he's been quoted in articles by Bloomberg and Business Insurance. Recently, he gave a keynote presentation at the 23rd World Captive Forum, an annual captive insurance conference. In his presentation, Michael Kerner not only gave a comprehensive overview of the dynamics of global risk, and this fits together with what we're talking about today, but most importantly, underscored the need for having a holistic risk management system involving many actors in the same market, providing different functions. In closing, the Cyber Statecraft Initiative, in partnership with Mr. Kerner's team at Zurich, has applied this innovative approach to cyber risk management. Michael Kerner's incredible work speaks for itself, but his thought leadership is just one example of why the Cyber Statecraft Initiative's partnership with Zurich has been so successful. So once again, Michael, we want to thank you and your team at Zurich Insurance. And then, Michael, before I invite you to the stage, I have to say one of the most important things one can ever say at a gathering like this. Today's hashtag for Twitter is hashtag risk after next, hashtag risk after next. And Michael, that means everyone will be ready to tweet your comments. Thank you very much.
Thank you very much, Fred, for those very kind opening remarks. And good morning, everyone. On behalf of Zurich Insurance Group and the Atlantic Council, I'd like to welcome you all here. And I'd like to thank you very much for joining us for the release of this very important report. Today, we will share insights on what we believe is a very relevant issue, one that has the potential for much further implications than we've ever seen before in this space. And actually, we've seen quite a lot already in the space of cybersecurity and in the internet. On April 6th, if you had a password on your accounts, your information was supposed to be secure, and you probably felt pretty good about it. You probably felt protected. Then on April 7th, we found out about Heartbleed, and Heartbleed took advantage of a fatal flaw in the safety features that are supposed to keep our web communications private. Heartbleed really shows us how quickly cyber risk landscapes can change. And on top of this, and on top of the whole high-profile issues that we've seen also with retailers, the world's biggest retailers around the world, we've seen a number of issues around security and privacy on the internet. The important difference between the two events that I've just referenced, though, is that security breaches at retailers, while they impact millions of customers, are largely contained to a single source, largely within the four walls of a single organization. A problem like Heartbleed actually expands outside the four walls of an organization. It expands beyond one actor, and it expands and it impacts the whole cyber community at once, and with interactions and correlations that are hard to predict and hard to understand in advance. Yet remarkably, despite these ongoing threats, the internet has been incredibly resilient for the past few decades. And today, you'll hear about how this may not be the case going forward. Zurich is in the business of helping our customers understand and protect themselves from risk. This is our mission. As one of the few truly global insurance companies, we have an intimate understanding of risk interconnectivity and driving forces shaping market conditions and behavior throughout the world. We're using our ability to develop the best risk insight to help our customers, both in Washington, D.C. and around the world, grow and manage volatility. And so we think about this problem of cyber risk in the context of risk management and risk management processes. And for us, risk management starts first with understanding the risk. The report we are issuing today, we believe, will take us a very big step forward in having various stakeholders better understand the risks that they face in the cyber world. And then after you understand the risk, you need to do something about it. The first thing to try to do is to avoid the risk. But in cyberspace, it's virtually impossible to avoid the risks. And in this day and age, you really can't be in cyberspace, at least at some point in your business. So then what you can't avoid, you need to mitigate. And what this report shows is it's not just sufficient to mitigate the risks within your four walls, but to look outside your own organization for the risks that need to be addressed. And then finally, typically what can't be avoided or can't be mitigated needs to be transferred, usually through an insurance policy. And here lies the challenge for the insurance industry, because the currently available insurance products do not provide great opportunities for risk transfer. There is insurance available, and it's becoming increasingly popular, but there are limitations to the coverages that can be provided, and they don't solve all of the problems that corporations and governments have with cyber risk. With increasingly complex and interconnected cyber risk, we know that more potential threats are out there and need to be uncovered. With projects like this, we are helping our stakeholders, our customers, employees, shareholders, and the communities where we live and work to better understand and protect themselves from cyber risks and to help them continue to leverage the benefits of the cyber world with confidence. We are looking at the most likely and dangerous risks to gain the understanding and needed protection against them. With their focus on the constructive leadership and engagement in international affairs, the Atlantic Council proved to be an ideal collaborator for us on this project. And with their focus on constructive leadership, that has certainly come to fruition. Zurich has a long-standing relationship with this organization on several levels. Fred already mentioned that Martin Sen was engaged in the discussion around this project from the beginning. He, along with Victor Chu, who is a previous board member for our organization, sit on the Atlantic Council's International Advisory Board. And our head of government and industry affairs is also on the Atlantic Council's board of directors. So we have a very strong relationship with the Atlantic Council. We've also taken the opportunity to have the Atlantic Council be very much engaged since the start of this project with our customers. And they have interacted with our customers on a number of different occasions. And we've also co-hosted a Cyber Risk Wednesday series, which is a monthly webinar series looking at cyber risks. And today, of course, we'll walk you through this new report, Risk Nexus, Beyond Data Breaches, Global Interconnections in Cyber Risk, which is the result, of course, of a year-long project between Zurich and the Atlantic Council. One of the key learnings from the report for Zurich is in the event of a global cyber shock, it's not clear who would be in charge and what levers could be pulled or used to reduce the impact to the internet and to society. In contrast to the financial sector, where a framework existed prior to the crisis that occurred in 2007-2008 that helped policymakers and businesses to coordinate their actions, such a governance structure is largely missing in cyberspace. To protect the integrity and reliability of cyberspace, governments, the private sector, and civil society must work closely together. We need a clear plan of what to do in the case of an event, both at the individual company level and also holistically, and hopefully this report becomes a catalyst for developing such a plan. I look forward to what promises to be a lively discussion today, and now I'd like to introduce the main author of the report. So in his role as director of the Cyber Statecraft Initiative of the Atlantic Council, he focuses on conflict and international cooperation in cyberspace. He published the first ever history of cyber conflict. He has a unique experience working on cyber issues within the private sector, as well as for the White House and the Air Force. Please join me in welcoming the Director of Cyber Statecraft Initiative for the Atlantic Council, Mr. Jason Healy.
Thank you very much. Thank you, Mike. Thank you very much, and please, one of the other panelists join me up on stage while I do some short thank yous. I did want to thank all the team from Zurich. I was able to learn quite a bit, and we all were able to learn quite a bit. We knew cyber, but working with the Zurich team, we really were able to understand a lot more about risk and risk management. I also particularly wanted to thank two of our Zurich Cyber Risk Fellows who have been serving with us as senior fellows, Neil Pollard and Jeff Schmidt. If you could both stand up and we can give our thanks. They were both involved very deeply. And also include a lot of the resources in their company to help make this a better report. I've got some comments, but I think we can, because Mike and Fred gave a good overview. Maybe I'll take my seat and we can launch into the panel.
Well, welcome to all of you, and thank you, Jay, for the introduction and the invitation to come and be with all of you today. Thank you to Zurich and to everyone with the Atlantic Council for being here. As both of our speakers so far have discussed, this is something that is on the minds of pretty much everybody walking down the street this morning. What happens to my personal information? Who knows what about me? Who is collecting my information? And what happens to that if some bad guy wants to try to steal it from an organization that I'm doing business with? As we dig into these issues today, I think it's appropriate to think about the fact that, especially in the dialogue that I engage in on my program, a lot of the conversation is focused on what goes on within the borders of the United States. This is obviously not a particularly prudent way to think about things, it seems, as anyone can access information from anywhere around the globe. So I'm very much looking forward to talking to all four of you today about some of the issues that are brought up in this report. Jay, I want to start with you. Congratulations on this, first of all. Isn't the internet safe, Jay? I thought I could go on and use password as my password, and or maybe change it to password 1. Yeah. To really fool them.
Last time I checked, you were on password 3, but...
Oh, well, thank you. Thank you for that reminder. I'll have to switch to 4 this afternoon. But where are we today as far as the internet being safe, not just for me to do what I do, but for companies to conduct their businesses over the internet?
And so the bottom line that we're trying to get across well, a couple of different main points out of the report, but we really felt when we got into this that the world is likely to be seeing more shocks that are initiated or amplified through the internet, and for a lot of the same reasons that we suffered through the 2007-2008 financial crisis. Fred mentioned the cyber subprime, and originally we kind of rolled our eyes and saying, oh, we're going to call something else cyber, a cyber 9/11 or Pearl Harbor. But unlike those phrases, this one was actually useful because it helped us think more deeply about it and think thoughts that we hadn't thought before. So it was quite useful because we found the more that we looked at this, we are increasingly dependent on a system that few of us understand, in fact, is so complex and interconnected and tightly coupled with real world that it's in many ways unknowable. And we thought, that's why I really liked Michael Kerner's comments this morning about Heartbleed, right? I mean, we went to sleep on the 6th thinking, and if you were a company, then you went feeling that you had covered your cyber risks, and you woke up on the 7th to find out you were desperately vulnerable to something you'd probably never even heard of. And that kind of sounds like the financial crisis, right? In the financial crisis, the experts would have told you, or many of the experts might have told you that it was impossible that these risks were connected. The American mortgage market wasn't connected. That certainly wasn't connected in any way that could almost break up the euro and cause governments to fall in Iceland and Greece, but that's what's happened. So we think there's a lot more caution. Specifically to your question, absolutely the internet has been safe, secure, resilient. And I appreciate Steve's comments on this, of course, because it has dedicated technicians that are working hard. NASA is proud of how Apollo 13, the NASA technicians worked hard to make sure we brought that spacecraft home. One of the reasons the internet is safe and secure today is that you've got dedicated technicians pulling off Apollo 13 saves all of the time, unbeknownst to us, working hard to make sure it stays up. That said, it is a very stable technology, It's a particular kind of network called a scale-free network that turns out to be extremely resistant to random failures. But it's also had a very short history, right? I mean, it's a couple decades old, but it's only a couple decades old. And this struck us, if you look at the financial crisis, in going through black swans, it struck us in a lot of the writings that we saw about nuclear power. There were people that were warning about nuclear power, but people said, look, it's safe and secure, nothing's happened yet. And the people that were warning were saying, look, we've only had we've only had a decade or three experience with this, just you wait. And so we think because of that this interconnected, tightly coupled with society, and some of these features are gonna help lead to more shocks in the future, unfortunately.
A lot there I want to come back to, Jay, but Dr. Steve Crocker of ICANN, Jay talked about resiliency. What's the state of resiliency on the internet today, and what does the progression curve look like in your view? Is the internet becoming more or less resilient, do you believe?
That's an interesting question, and I don't know that it's got a quick or direct answer.
We have plenty of time.
And well, that's a seductive kind of invitation to just go on forever. So, as Jay said, the internet is a couple of decades old, which is either long in terms of internet years, but short in terms of human life, human experience. It's still evolving. We have a lot of experience with some of the basic technology, and yet we still have enormous amount of innovation going on and expansion. And the kind of forces that are at work today have a lot to do with aggregation. So you have emergent large players, you've got consolidation, and that inherently brings some aggregation of risk. Things that used to be separate are now together, and so you have dependencies there that might be problematic. I sit these days as chairman of the board of ICANN, which oversees the domain name system and the addressing structure and the unique identifiers for the internet. And we spend a decent amount of time being concerned about, we don't have much control, but we spend a lot of time being concerned about, are there risks that would not affect just individual players, but would affect, is this better? That would affect large numbers or possibly the entire system. We can identify some of them, but it's the unknown knowns, to use a common phrase, that are the ones that are most troublesome. The other side of that, just as a sort of a separate note of caution, is too much concern about things that aren't identified but might come and bite us, leads to a kind of chicken little mentality. The sky is going to fall, but we don't know why. And I worry a lot about that kind of overreaction. So the challenge is, how do you have the proper focus on the things that need attention and not have just a free-floating anxiety that is causing a lot of concern? My father was an insurance broker, and I grew up listening to the fundamentals of insurance around the table. I'm absolutely delighted that insurance companies are paying close attention because they bring a discipline. Now, part of that discipline is to reduce everything to dollars and cents. That's useful. It's not everything, but it's useful. But the analysis that goes on underneath the basic structure of the industry, of the insurance industry, is, I think, vital and important to bring to this.
Your comment made Dan smile over here. Dan Reardon is the Chief Executive Officer of Zurich Global Corporate in North America. We talked a little bit before we came out about the conversations you have with clients. What's the difference between the questions your clients are asking you about risk and the questions that you think they should be asking you about risk?
That's a good question, and I'm very happy that your family has an insurance broker in their lineage. We work very closely with insurance brokers as a major carrier. From my perspective, when I'm thinking about your question and thinking about the issue, I think about the amount of time that we spend with our customers. How the discussion has evolved and how the discussion has become much more of a discussion in the C-suite, not just in the risk management community, because it clearly with all of the events that have occurred in recent days, Heartbleed is the most recent. There have been companies that have been impacted significantly. I arrived in National Airport yesterday and saw a big advertisement that suggested that the U.S. government alone is impacted with major intrusions 60 times a day. 60 times a day. So we can't escape it. And I think what I've seen is, and what I gathered from the report, one thing that stuck out for me in the report is the statement, and I'm paraphrasing it, so excuse me, Jason, but I'm paraphrasing it. It's basically the internet was created in a trust environment, not a secure environment, or is not focused on security. That it's become apparent to many of our customers, and when I'm working with risk managers or I'm meeting with their CEOs or their CFOs, it's become much more of an issue. And so to suggest that there's been a gap that's closed and continues to close between the worries of the risk manager and the attention of the C-suite. And I think that's the big takeaway from the report for me, but it is a large issue for our customers. I've got a couple of quotes from our customers that I've just been speaking with lately. If I could just share a couple of them, because I think they speak to kind of the challenge we have as an industry. You mentioned about the industry, which I think is innovative and is looking to basically help our customers better understand and protect themselves from the risk. So a couple of comments. These are directly from CEOs. Number one, cyber breaches keep me up at night. I haven't heard that just from one CEO. I've heard that from many CEOs. Cyber breaches keep me up at night. Second, I worry about data breaches for sure, especially with all the stories in the news, all the companies that are mentioned. I'm sure now it will be getting the attention of the C-suite. This was obviously written from the perspective of a risk manager. It'll get the attention of a C-suite. They'll probably start really pushing it now. The third one is the insurance model for cyber risk is woefully behind the times. If our employee data is lost, we do all the right things, of course, but I worry about the Trojan horses, the reputational damage that's out there for us. For the interest in the insurance industry providing certain protections for companies as we become more aware.
Thank you. Catherine Mulligan is Senior Vice President of Specialty Products for Zurich North America. Catherine, you and I talked a little bit about the situation that companies find themselves in when they want to try to cover this risk. Mr. Kerner talked about the avoid, mitigate, transfer sequence in his remarks. Vendors that I talk to in particular that sell into the federal government who are trying to help them deal with those 60-plus intrusions, and I think that number is a little light actually, but dealing with those intrusions are telling me we're having a hard time, as Dan said, finding a way to transfer that risk. What is the holdup right now, either legislatively here in the United States, policy-wise here or around the world, to that kind of transfer being available to companies?
Right. Well, I think it's important, and I always start with the Richard Clark model, which he uses this acronym CHEW, and he says that the universe of the exposure is crime, hacktivism, espionage, and war. So if that's the universe of what our concerns are, really the insurance industry, the coverage that's available emerged out of financial institutions and technology errors and omissions policies. So it's a financial loss policy that comes from if you have liability arising out of a network breach or a privacy event. So historically, insurance has been a mechanism that follows loss trends, that follows regulation, and we've always been sort of reactive. And what this thought leadership with the Atlantic Council shows us is that we have this unique opportunity now to be proactive and try to get ahead of what's actually happening. So to your question, Francis, about what the holdup is, I don't know that it's a policy issue. Maybe that's part of it. We have concerns about things like aggregation. So what that would mean is a couple of things. So if everybody in this room ran a company and we all used the same cloud service provider, and that cloud service provider had an outage that was major or had a breach that was major, and you were all insured by the same insurance company, that's an aggregation issue of loss. We also have concerns about aggregation around multiple financial lines being impacted. So, for example, you might have a security and privacy liability policy that's impacted by a major breach, but then if you had a stock drop and related derivative suits arising out of that, your directors and officers' liability would be impacted, and so on. So we have aggregation concerns to figure out. We also have to try to determine valuation issues. So I think, Francis, you and I were talking about intellectual property, and that's a question that we hear a lot from companies. How do we value that? If a state actor came and took all of your corporate secrets, how do you value the crown jewels? So as we try to evaluate these valuation issues, I think the coverage, what you'll see is that it's evolving even as we speak. And then on your policy comment, I will say that the Department of Homeland Security has done a nice job in reaching out to the insurance industry to try to create a dialogue around risk management. One thing that I really appreciated about this report is that it moves the dialogue from protection, just building a better wall around the castle, to resiliency. And that is the kind of dialogue that DHS is helping facilitate with the insurance industry. So I think there's more to follow. It's just that we're trying to get ahead of the curve.
Well, and that's actually where I wanted to go next. Is it your sense that this is a progression, that there is movement? Or is this something where there's something gumming up the works and progress is not happening at a rate that either you or your customers would like to see?
Well, I think there's movement. And Dan, I mean, you and I have been talking about this issue for the last 4 years. And so I think we've definitely seen an evolution in the coverage. It's changed tremendously in the last few years. The dialogue with DHS that's a new issue. We are rewriting our policy right now, so we're trying to keep up with those changes. So what's gumming it up might be what the report references, which is the inherent complexity of interconnectedness. That complexity just makes it tough.
I might add, I think where the report is helpful, and I think Fred in his well, was the fact that 2013 was certainly a tipping point, right? Mm-hmm. So nearly $150 billion worth of losses attributable. One major retailer is probably responsible for 15% of that. So it's huge. It's in the press. It's very well known. Why is that important? I think with the report, it points out that the awareness level is high. So I mentioned about this raising awareness among the C-suite. What we see is we see much more interest among the C-suite in the preparations that are necessary to prepare. So an insurance policy is one thing, and coverage, right? And so we're very happy to provide that. But the preparation and the thought leadership and the risk insights that go into helping companies to better prepare themselves for the risk is the thing that I think is the most paramount. I think that's the area where we see a shift, where we see much more interest. It's no longer just an IT problem. Right, so it's not something where a CEO or a CFO can say, the IT guys say it's okay. It is definitely becoming more of an interest among them that this become a more holistic view, that they take a more holistic view, that they gather the right parties together to set the right strategy for dealing with cyber risk as a company, recognizing the significant impact that can happen ignoring those important.
Recognize, though, that this is no longer an IT problem, that this is worthy of attention at the C-level. How has that changed the way that you interact with them? How has that changed the way that you want to provide information to them? And how has that changed what you need to know about what their situation is?
Right. So, and Catherine, certainly feel free to add your views, because she spends a lot of time with the C-suite as well as being a truly important subject matter expert within Zurich. Where I see is that there's much more engagement. They want to be engaged, and they're looking for insight. And I think that, it's not just to buy a policy to put on the shelf to keep the board happy, because the board is just as concerned, and many of the companies as well, about the preparations. It's a bit like preparing for disasters, right? So we spent a lot of time on resiliency for catastrophes as a major property and casualty insurer, and we work with a lot of our customers, helping them prepare. We pull in resources such as risk engineers who can help companies prepare, to be thinking about how do they prepare and prepare themselves for flood and wind and other damage, for catastrophes. This is a new catastrophe. This is a catastrophe that is, that can impact their balance sheets significantly, impact their earnings reports. So it is risen in importance to them, and they're looking for us and other groups like the Atlantic Council and our partnership to provide that support and that knowledge base to help them to better prepare.
Jay, the thing I think that struck me the most about this report is the parallel that you mentioned earlier to the financial crisis in 2008, 2009. Cyber subprime. Where did that concept come from, and what does it mean in the context of the things that we've talked about so far?
Yeah, what we were trying to get across there was trying to say that you've got these, another way to think about complex risks, and especially risks that are difficult to see clearly at a particular time. The finance sector securitized risks. They chopped up, they took financial assets, they chopped them up, they sold them off. Others took bought them up, recombined them, chopped them up, sold them off again. And at the end of the day, you had PhDs with $10,000 or $100,000 bonuses, roomfuls of these PhDs, modeling to try and figure out where that risk was. They had economic theories, and they were trying to figure out, all right, here's where the risk is going to be. And almost all of them were wrong. And we, in our field, are doing a similar thing. We invented another ugly word, which we didn't use a lot of, calling cyberizing the risk, right? We're not securitizing it and chopping it up and selling it off, but we're highly leveraged, not on dollars, but on IT. Just like the folks that were dependent on securitized risk didn't quite fully understand what they were buying into because it was so complex, we're mostly not getting how leveraged we are on IT. And so that's where we came across this idea of these aggregations or these interconnections of risk. We wanted to look at where these, at first we were calling them pools of risk. So in the finance sector, it was pooling in things like subprime mortgages that you might be critically exposed to and you didn't even know it, because you were dependent on someone else that was dependent on someone else that was dependent or exposed to subprime mortgages. In the same way, we wanted to look here of we are exposed when we have counterparties or partners, or to outsource partners, or an example that Catherine brought up of cloud service providers. So when we extended the finance sector analogy, we said, well, imagine if one of these cloud service providers has a Lehman moment. They're there with everybody's data on Friday, and they're gone on Monday. Why should we suspect that a cloud service provider is any more or less likely to be there from one week to the next than a bank like Lehman that had been around for over 100 years? And so again, we found that it helped us think about this in different ways. And there's a quote from Dan Geer that we particularly loved. If you've ever heard Dan Geer, he's one of the eminent technologists and philosophers in our field, who said that increasingly we're so interconnected that increasingly even the mundane comes to depend on distant digital perfection. And I loved that as a phrase, dependent on distant digital perfection. And that's what I think we also saw in Heartbleed. We were dependent on this technology that had been there for, frankly, over 10 years, had dozens of eyeballs over the years checking to make sure that it was secure and we could rely on it. And at the end of the day, it still had a critical vulnerability. So what's that going to mean as we start putting the electrical grid online? As we start having driverless cars that are talking to the cloud, as we're having industrial robots that are dependent on the cloud, that we have embedded medical or wearable medical devices or online medical records. We don't have that long a history in this space just yet.
And one of the things I would add to that is that some of our responsibility is to help translate that technology speak into business speak for the C-suites and for the risk managers. So the way those complexities that Jay just described appear in my conversations is that a risk manager will say, well, right, but I've got great contracts. I do outsource parts of my business, even critical parts of my business, but I have strong contracts, so the liability is transferred. Well, even in, it seems like privacy breach is a little bit of a pedestrian topic now in the context of this report, but it's still an issue. That's still on the front pages. It's still costing businesses money. So what we hear is, well, haven't I transferred that risk? No. If you have a privacy breach because it happened at your data storage company, the state attorney general is going to say that was still your data. So your contracts are not necessarily protecting you. The other thing is that contracts the idea of liability is still evolving. So who is responsible in some of these situations? The class action lawsuits are still pending. We don't know how it's going to turn out. That adds to the valuation issue that I mentioned before. So in a real practical sense, some of these comments that Jay is bringing to the fore with this report is it gets complicated for a C-suite to say, I'm trying to put dollars and cents around this. I'm trying to explain to my board how we're protected. So those are the kinds of underwriting conversations that we have.
Steve Crocker, Jay used the term cyber 9/11, cyber Pearl Harbor, alluded to a cyber Lehman Brothers type episode. And Jay, we'll talk later about the likelihood of that in your view. But Catherine alluded to the point a moment ago of who would be in charge, who would be responsible for figuring out what to do next, as the various governance bodies did during the financial crisis in 2008 and 9.
Yeah, so I guess the mention of the word governance bodies is interesting, because if one looks at the internet and says, so who are the governance bodies? And inevitably, ICANN gets drawn into that conversation. And we are, in a very lightweight sense, we are a governance body, but of a very limited and narrow perspective. And so the natural question is, well, who are the others? Well, and then there's kind of a wasteland. One of the big issues is, what is the superstructure, if you will? Catherine talked a lot about basically in terms of a company protecting itself by looking at how to mitigate or transfer its risks. But if you step outside of the individual enterprise and say, okay, from an industry perspective, from a global perspective, how do we identify and how do we deal with risks that may affect large numbers of enterprises? Now, the idea that there's going to be a cataclysmic failure of the entire internet is, as I indicated before, a kind of a little response or thought that, frankly, I try to shy away from. But it is useful to try to identify where are the potential big failures, and more usefully, where could energy be applied that would do something useful about that? Where can investments be made to bolster the technology? Where could investments be made to build better practices and better education, not just in terms of, you should probably skip 4 and use 5 as your next password, but something a little stronger than that.
I may capitalize the P also.
And the W as well. but you know, to be serious, so a big leap forward would be why do we burden humans with having to generate and remember? It's not the highest and best use of our. That's not what we were. We didn't evolve to be really good at generating and using passwords. We have machines that can do this very well. Why don't we have a better technology so that it's all automated and you don't have to be involved in that at all? So how do we step outside of our current paradigms and look at how to create new paradigms that are inherently stronger from a security point of view is where I focus attention. There are occasionally some nightmare scenarios. I don't want to get into too many details, but I found myself in the uncomfortable position a few years ago of being aware of a potential of a vulnerability that had a potential of being having a massive, widespread impact, and I found myself having to think in a kind of C-suite way. Okay, what do I do with this knowledge? And one of the things that I worried about is if something bad happened and I hadn't told anybody, what position does that put me in or put my organization at risk? And so I found myself placing phone calls to key government officials on 4th of July weekend to their cell phones and getting through and saying, here's what I know. And they basically said, okay, thank you very much. And small amount of stuff after that. And then fortunately, nothing bad happened. But it is the sort of thinking through, what do you do in the event of a nightmare scenario? And a lot of thought after that about how do we avoid being in that. And I'm not pleased with the progress since that time. There's lots more work to be done.
Neither am I. Thank you. That I can see the insurance genes coming out in that comment, actually, because this is exactly the kind of conversation that we like to engender with our risk managers about creating a culture of awareness in their enterprise. Because you might have the IT team diligently trying to fix something that maybe starts off looking like a smallish problem, but then do they know when and how to elevate it, even if it is 4th of July weekend? And when does the risk manager get involved, the C-suite? When does the board need to know what is a material risk or breach? And the report actually talks a lot about bringing this to the board level awareness and creating a dialogue and a culture inside of the enterprise that would make this important. So thanks, you're forwarding my agenda as an underwriter.
Good. Yeah. Just to add on, I think, to what Catherine was saying, it is about preparing. It does remind me about preparing and how we worked with companies to prepare for Superstorm Sandy that impacted the New York region, impacted a much larger region. Some 34 states were impacted by the storm. But those companies who are operating in the New York region who were prepared, who had a strategy, who had vendors lined up, vendors, as basic as the vendor who could provide sandbags in advance of a flooding situation. Those preparations that were documented, that were rehearsed, that were updated in terms of the preparedness were those companies that actually continued to operate and never missed a beat. And so I think that what this report talks about, what we're doing as an industry, is focusing a lot on the preparation. How can companies better understand and then protect themselves from risk? A lot of that is going to be the preparations that go into it, lining up those vendors, having that, having those vendors to provide the necessary security, the necessary credit reporting services, the PR firms, the legal firms, dealing with the regulatory concerns that will come about, but having those in advance and not letting them be stale, those plans. Those plans need to be looked at. They need to be looked at a very senior level by the board of a company. They need to have a number of parties involved. Again, not just an IT problem, but really a more holistic problem for companies to deal with.
Okay, you had comments on that?
And this might be good to talk about the recommendations because it fits in. But on Steve's point, we didn't want to come out with the Chicken Little with just a generalized lookout. We wanted to make the point not that the internet's here today, gone tomorrow, And I'm really glad that Dan brought up Superstorm Sandy. You know, one of the trends that we look at here at the Atlantic Council through our strategic foresight initiatives, you know, when we look at the larger trends like migration, urbanization, super-empowered individuals, diffusion of power, climate change is one of those, and we can expect as part of that, for example, we would expect to see more natural disasters. That you're going to see an increase in natural disasters that are going to affect people. The OECD said we are expecting to see all sorts of, you know, an increasing trend of global shocks. So we don't necessarily want to say that that internet's here today, gone tomorrow, but that the internet is part of this larger world that we're going to be in. If we're seeing a larger set of global shocks, the National Intelligence Council said there's a general, not a breakdown of governance, but governance ain't what it used to be for global governance on all issues. And the internet fits in with that. So that we should expect to be seeing more of these global shocks. Again, not that it's going to collapse, but that we might start seeing things like hearing about a target with a massive data breach, hearing something like Heartbleed, a failure of this technology that we're critical on, that we're critically dependent on, but we've never heard of. And instead of hitting us once every 3 years, it might be every month that we're seeing a big denial of services back, a big data breach, a big someone hacks driverless cars and sends them off, and that we can expect these shocks to be coming at an increasing frequency. And just like Sandy, like the solution to Sandy is not to keep stacking your sandbags ever higher in front of your company. That's not going to be a solution. You're not going to be able to SLA your way out of the cyber crises. So we looked at 4 shifts in the recommendations. One, a shift of increasing responsibility to the board. Page 9 of the report, we looked at some of the surveys that have come out. The UK government did a great one where the board seemed relatively confident, boards seemed relatively confident in their understanding cyber risks. And then the questions where they said, well, do you know what your information assets are? Do you know who external you're responsible to? Do you know what would happen if these information assets get disrupted? They didn't have a good sense of that. So it seemed to be a false confidence. The second shift is shifting away from protection to resilience. And this is what Dan and Catherine just talked about. You're not going to be able to protect your way out of this crisis. The companies and organizations and countries that will do best will be those that focus on agility and resilience. A third shift away from looking at the point risks of what's happening within a company's 4 walls out to these other interconnections of risks, these other pools of risk. So companies need to do that, and governments need to do this as well. If you hear a lot of when you hear DHS or NIST or other places, there still seems to be a very strong focus that we can solve this by going one company at a time. And that strikes me, again, what we did for the finance sector. We would go one bank, one risk at a time. How exposed is the Bank of Fred to, say, subprime mortgages? Bank of Fred is exposed 1 million, Bank of Harlan is exposed for $1 billion. Well, Bank of Harlan might have a couple of really bad quarters. And we learned you can't look at financial risk like that. You have to look at the interconnections of those risks. And the last shift is towards this governance of starting to think of how we will deal with these crises. When we had the finance sector, the head of the New York Fed could call together CEOs in a room and say, we're not leaving because we got to get this fixed by Monday morning, opening of the markets. How would that work here? Who calls people together? What room do they get together in, and who do they call together? And that's just in the US. Maybe we can solve that in the US. But internationally, they had a G8. You had an International Monetary Fund. You had the Basel, the Bank for International Settlements. And those groups didn't prove fully up to the task. But at least they served as the foundation. When the G8 wasn't enough, we made the G20. When Basel II wasn't enough, we said, good, let's look towards Basel III. And we've got some of that here. like ICANN or IETF and some of these other groups. But they're barely enough for today, and I think they would be increasingly challenged, especially as nations increasingly make this a national security issue. The more that we have spies and generals in charge, the more that we're going to see that cross-border trust and cooperation, which has been fundamental to fixing internet problems in the past, are going to be increasingly challenged in future.
Jay, I want to dig into the recommendations in a moment, but I have one more question before we do that. And we also will look forward to your participation in just a few moments. So I hope you've been jotting notes about questions that you have for the members of our panel as we've been going along. Steve was a little bit apprehensive, I detected, about the possibility or even the discussion about some kind of huge cataclysmic event. So maybe help us understand what the potential levels are that we should be thinking about when we think about cyber shock events. What are the kinds of challenges that we should be thinking about, or is it even possible to think or try to predict about those kinds of things?
In the report, we talk about a few possible scenarios by which the initial shock might start. You know, we talked about a Lehman moment with one of the global cloud providers. You know, today that might not be so big an issue, but it's going to be a lot bigger issue today than it was 5 years ago. And it's going to be a lot bigger issue 5 years than it was now, because the internet is becoming increasingly linked with the real world. Again, just like finance. You know, financial crashes became so much more because it wasn't just Wall Street, it was connected, tightly coupled to Main Street. So, and we talk about a few of those, but we feel that we didn't get so deep into it because we felt there was so much complexity to really constitute dry tinder. And the spark could come from many different directions. And trying to figure out exactly which direction that spark was going to come from, we thought wasn't as fruitful use of time as trying to get across the general complexity and the problems that brings. Because, and this is, when you have an engine, any system that's highly interconnected, tightly coupled, especially that has a lot of common mode functions. Common mode is when the part in the system serves more than one function. It's used both to help speed it up, for example, and slow it down. When you have one of those common mode functions that fails, it tends to fail across the system in ways that are extremely difficult to predict. When you have a highly interconnected, tightly coupled, a failure in one part of the system can cause failures in some other part that the engineers never imagined would happen. That gets to be cascaded through. And you end up with failures that people would have told you wouldn't have happened. Like the astronauts on the Apollo missions. When they were testing before they would launch, they would say, look, this is crazy that you could have 3, 4, 5 things fail. This is silly. We just have to go down to 1 or 2 things at a time. Let's make this realistic. And to me, that reminds me so much of finance sector, where when it started going wrong, I remember at Goldman, we had a couple trading days in a row that our models told us were something like 34 sigma events. I mean, they were so far in the right tail of improbability that the universe should have died and been reborn 8 times before such an event would have been possible. Yet you saw these interconnections that were coming through.
The recommendations are divided into 2 primary types: system-wide risks recommendations and local risk recommendations. Give us the broad overview of each of those, and then we'll take questions from the audience.
Great, thank you. And I gave the broad overview. So we wanted to look specifically at companies. So that, all right, you're a company, what can you do? And so we said there's some basic and advanced cybersecurity things you can do. And that'll protect you both from data breaches and denial of service attacks, as well as the things that we're talking about here, because you just got to do them. Basic is things that, the top 20 security controls, just patch your systems, and that's going to help you. Advanced, we wanted to try and look at, for example, one of the banks that we talked to in New York went through every contract. You know, Catherine talked about the SLAs and the other things. They said that's not enough. We want to go through every SLA, every contract we have. Do they have access to our systems? Do they have access to our information? If so, what do they do with it? Do they have a good business continuity plan? Do they pass that information out? Do they subcontract our information out to anybody else? And how important is that company to our own business critical operations? And this took something like 2 years, and they had a VP managing director running that. So you can imagine that must have been at least $1 million or $2 million a year just in salaries to do this. So not every company can do that, but this is exactly what we mean by pushing out the risk horizon. Not just looking in your four walls, but starting to go back. There's some technologies that let you do that too. For example, Looking Glass, that you can, if you get Looking Glass, it gives you views into how vulnerable your counterparties, your vendors, your upstream providers are. You know, how riddled with botnets are they? And the recommendation for companies to shift away from only protection to resilience and agility. For governments, as well as those with system-wide responsibilities, like ICANN and others, again, pushing out that risk horizon, stop focusing only on the point risks, seeing what you can do at scale so that we can get defense better than offense. Because the attackers have had the advantage in cyberspace for 35 years at least. So we say we've got to start shifting this so that the defense has the advantage. One of the main ways to do that is a private sector-centric approach. Governments have staying power, massive resources, at least OECD governments do, and access to other levels of power. Private sector has agility, subject matter expertise, and they have their hands deep in cyberspace. One of my colleagues, Mark Sox at Verizon, says, look, we're creating cyberspace, we're maintaining it, we can bend it if we need to. It's a great phrase. Private sector can bend it if they need to make it more secure. So we think a private sector-centric approach that takes these strengths of governments and these strengths of the private sector is the main way to get defense better than offense.
Thank you very much, Jay. A lot of questions I see already. I'm going to start right here. Please tell us who you are, who you're with.
Are we waiting for?
Yep, the mics are coming.
Mike's on the way.
Here in the front, Harlan.
Right here in the front.
I'm Harlan Ullman with the Atlantic Council, and regrettably, my bank is more like the size of Fred's bank than the other way around, sadly. My question really is, what do you think, and I say this in an unfortunate sense, the role of government, especially the American government, because we tend to screw things up. We have Cyber Command, which is understandable, but as Jason pointed out, you have spies and generals, which is not necessarily a good sign. It seems to me that the financial crisis of 1907 has a lot of relevance here for three reasons. One, credit default swaps, believe it or not, were made illegal for 90-odd years. Two, the National Currency Commission was established, and more importantly, in 1913, the Federal Reserve. Now, if I argued that something like the Federal Reserve or the SEC or the FAA might be a way of putting together a government organization reluctantly because the risks doing that well are very, very real. Plan B would be establishing, say, a separate deputy of the Treasury Department or the Justice Department to oversee cyber. And so I'd like to get the panel's view of what you think the role of government should be, and how do we put this into an organizational and operational sense?
Who would like to start?
I'd be curious to hear Steve. I mean, I'm happy to join in, but.
Steve, would you like to go first on that one?
Yeah. So there is a very important role for governments. Rule of law is a big help in this area, and we don't have enough of it. Cyberspace doesn't match national boundaries very tightly, and that's an understatement, right? It just flows all over. So to the extent that we need an effective set of laws and equally important, an effective set of law enforcement mechanisms. You need international cooperation. You need harmonization. We have too much, too little cooperation across national boundaries and too little uniformity. So we get major attacks coming from jurisdictions that say, not our problem, and it's not even a crime in our jurisdiction, so go away, don't bug us. There's a lot of room for improvement there, quite obviously. I would not like to see overbearing regulation and micromanagement from federal level. As you said, that's a sure way to screw things up. As bad as things are, you can always make it much worse. But I think the international cooperation aspect is extremely important. In that regard, let me just mention, next week there will be an absolutely spectacular and historic meeting in Brazil, Net Mundial, which is trying to bring not only governments together but multi-stakeholder of every segment to look at very broad issues of internet governance, not just the things that ICANN's involved in, but how do you deal with the issues for which there is no clear home at the moment. And a lot of those obviously have to do with various aspects of crime and abuse and cyber attacks and so forth.
Jay, I want to come to you in a minute, but Dan, I wanted to ask you first, from your perspective of understanding what clients need because they're telling you all the time, what governance structures that don't exist today, whether in the United States or other places, would help you do what you need to do to serve those customers?
So I think what Steve has already mentioned, I think is important, right? So the interconnectivity that is a basic premise within the report is something that our global clients feel they're part of the global economy. They will want to see some of the things that were just mentioned in terms of how do you bring together the governments, organizations, and the private sector, right, to be able to share common ideas on how we can have better rule of law. Obviously, the basis for companies to work internationally, where do they tend to go? They tend to go to those markets where there's a good rule of law, basic rule of law, for them to know that the investments they're making will be protected over time. So the investments that they're making in their corporate structures, the investments they're making in their IT structures and in the internet are part of that.
We shared, in the report, it was tough to make a finance sector analogy because we didn't want to go, because if we go down the finance sector analogy, then we didn't want folks to come in and say, oh, good, we regulate the finance sector, we should regulate this. And we share Steve's thoughts on that. We mentioned regulation a couple times. The OCC, the Office of the Comptroller of the Currency, has started to come out to banks and say, you can't just look in yourself, you have to look at how exposed you are to counterparties and outsourced. And as much as we're not trying to push regulation, we said we can cautiously pursue that approach for industries that are already regulated. This wasn't in the report, but personally I find regulating for transparency rather than security can be a big help. Rather than telling banks, here is exactly what you must do, or here are the standards by which you have to secure yourself, regulating to say, when things go bad, you have to tell people. And let the market catch up to that. The SEC guidance that says if you've had a cyber incident that's materially significant, you have to talk about it. The California data breach notification of 2003 changed a lot there. What else the United States can do? I think having a single strategy to get defense better than offense. Right now we've got 3 strategies. We've got one for commerce, to have a strong internet for, a strong free internet. We've got a internet freedom that's run out of State Department, and we've got a national security strategy. And with one strategy, with 3 different approaches, it's tough to trade off priorities between them in ways that I think haven't been useful. I think there are some targeted grants that we can do that we talk about in the report. I was the vice chairman of the group that did this for information sharing and incident response for the finance sector as a whole. And we were kind of going down a bit when Treasury came in with a $2 million grant, and now we're winning awards. So places that government sees that good things are already happening, and there's lots of groups like this that in the internet, where you have these non-state groups that have a critical role to play, I think targeted grants for those, even if they're not US groups, could be a tremendous investment. You know, $2 million, $50,000 so they can get a secretariat and get some additional technology could go a really long way to making this happen. And last on governance, because it's come up a couple of times. We didn't want to, the problem with finance sector, as I said, was, well, we don't want to have Basel type standards for the internet. But Microsoft had informally proposed a G20 plus 20 to talk about norms. So you get the G20 group of countries plus 20 key IT companies to get together and talk about norms. Now, the numbers don't matter, whether it's 20 or whatever, but we really grabbed that as an idea for governance because it's not regulatory. If you're invited to that group, you can have expectations that if you're selected to this group, that you must help fund some of the good ideas that you come up with, that if you're in this group that you've got, that you need to step up for the systemic role that you have. The equivalent in finance sector would be SIFIs, globally systemically important financial institutions that are so big that there are extra requirements levied of them. We liked that idea and we were trying to push that, but in a non-regulatory manner.
Next question. Let's go right here.
My name is Hung Tran from the Institute of International Finance. If you look at cyber events, meaning crimes or disruption, it came from non-state actors, but increasingly from state actors as well. So a lot of we discuss an excellent recommendation you have here deal with the kind of the crime situation, non-state actors. But the big elephant in the room is state actors getting into the cyberspace. So don't you think that we should, in terms of multinational, international cooperation, have also a better understanding, better definition of what constitutes cyber hostilities, a clear red line beyond which states should not go? Because at least we can take that part a bit out of the equation, and then dealing with the non-state actors is very complex and difficult as it is.
I'm going to go to you to kind of play off of that for a moment too, because it takes us back to where we were just a moment ago with governance, and determining what definitions are before you determine what policies are.
So in having just done a history book looking at cyber conflict, there were a couple of years that were really seminal. 1998, a lot changed. 2003 was another one of those big years. 2013 might be another one of those big years. But I'm not sure how yet, because there were two huge trends. One, the positive trend. Nations were agreeing with one another. You saw there's a UN group that got together and agreed that international law does apply to things like cyber conflict, that the Geneva Convention, the Hague Convention do apply. You saw the U.S. sit down with Russia between presidents. You saw U.S. and China sit down between presidents. You saw important international gatherings that got together. So you've got this trend where you can say, wow, maybe governments are going to get their act together on this. Then there's the other trend. And the other trend was where it became increasingly obvious that nations are okay that the internet is a wild west. That it's increasingly okay that nations agree that it's okay to be talking above the table and stabbing the guy next to you underneath the table. And we learn that in all sorts of ways, not just the internet attacks from Iran against US finance, but what NSA was doing is revealed by Snowden. So you have this talk about norms, but you also have all this skullduggery happening underneath the table. So it's going to be, I'm very curious to see which of these trends is going to be more powerful over the longer term. When I got into this business in '98, the United States said, look at this. Countries can attack one another with almost impunity at quick speeds, and kind of get away with it. This is terrible. Nowadays, and when I was in the Pentagon, and I'd hear that, and now when I'm in some of the same places, I hear, oh, look at this. Countries can attack one another at speed and with near impunity. This is awesome, baby. And we seem to be increasingly okay that it's a Wild West. So I think first the United States has to make up its own mind which of these two trends it's going to go down. And we're still in the midst of that, I think, in the White House. We're seeing trends either way. So I don't think, I'm hopeful that we might take that off. Fortunately, we've seen some thresholds that governments have not been willing to have really devastating cyber attacks on one another. You mentioned cyber Pearl Harbor. We've been talking about a digital Pearl Harbor since 1991. So over 20 of the 70 years since the actual Pearl Harbor, we've been warning about this thing. So we think that helps show that there is a threshold governments aren't willing to go beyond. You know, we're not going to take down each other's infrastructure when we're not getting close to having a war. And so maybe we'll continue with those somewhat positive trends. Thanks.
Let's go right here to this lady, and then we'll come to you next. The lady right behind you. Thank you.
Hi, I'm Marcy Wilson, and I've known Jason for years and years. I'm a graduate student at George Washington University, and one of the reasons I went to George Washington is because I'm very interested in the combination between cultural anthropology and cybersecurity. And I think what we really need to do, I agree about the defense, and I think we've really lost the bubble on that one, but getting users more aware of how to protect themselves. Yeah. And having been a security manager for several organizations, the IT department was my biggest enemy because they would try to do things to get around what we were doing. And it made it very, very difficult. And then technology is getting better and better. But what are we doing to really get users to understand not to have password 1234, not to use your dog's names? I'm seeing the same problems I've been seeing for the past decade and a half, and I'm not seeing it get a whole lot better, which is why I went to go and get a doctorate in this so I can start publishing and talking about it.
And I want to take you down that path a little bit, because as you go and talk to your clients, these are the struggles they deal with every day. Mm-hmm. I hear it from leaders in federal government who tell me, CIOs of major agencies who say, we're supposed to be one of the agencies on the forefront of this, and I have password 1234 people that I can't even get. So there's always going to be a risk there. Avoiding it is not really an option anymore, and then they're coming to you for the other pieces of this.
Sure, Francis. I mean, I think it's a good question and a good comment. We do see more and more CEOs who are willing to recognize that this is not an IT issue, this is not just for the CIO, this is for the company. And in a sense, it's companies who are not looking at it on a more holistic basis, who are betting a lot. They're betting the shop in a sense, right? Because there's more of a recognition of the potential impacts. You just have to see the impacts on some of the companies that have had major intrusions, the impact on their share price, the impact on their operating income, dramatic downturns. That's not what a CFO or a CEO wants to wake up to the next day. So raising the bar on the awareness, which I think the report helps to do, which I think, a lot of the discussion about the role of government and the private sector coming together, finding new venues, finding new groups to get together to raise this awareness is all important, because it's still relatively new. I mean, some of these issues have been around for a while, but the severity of them has increased dramatically over the years. I think, Jason's point about we're not so sure yet about 2013. What we do know is, $150 billion worth of impact, negative impact on companies in 2013. It's huge. And it's not going away, just like catastrophes in terms of wind and flood are continuing to increase in severity and frequency. We would expect the severity and frequency to increase on cyber risk. As an industry, we're preparing for that. We're helping our customers to prepare for it. We're looking at products that can help them as well. But it's that awareness, I think, which is the key.
And if we create a culture of awareness, then it's no longer the chief information security officer against the risk management office. Then it's all stakeholders working together. Because what I frequently hear is the chief information security officer can get a little prickly when I walk in the room as the insurance underwriter, because A, they might feel like I'm impugning their good work, which I'm not. I'm actually supporting it. If they're doing a good job, then I can potentially offer insurance for them. And then they're also competing for resources. Hey, why should I pay Zurich premium for an insurance product? Risk manager or CFO, you should give that budget money to me in the IT department to keep doing this great work that I'm doing. So when we create a dialogue where all of the stakeholders are around the table, hopefully those frictions are reduced.
Can I
That takes
jump in on that?
leadership.
Please.
I'm much more cautious about trying to convince users. We've been trying forever. And remember, my goal as a cybersecurity person is to get defense better than offense for a company, for a sector, for a nation, but really for the internet as a whole. If we're not doing that, what are we doing? And so taking that view has made me very skeptical about fixes at the endpoints. Because it doesn't scale. So I get if you're an individual company, you have to do that. But when I think about the system as a whole, I want to do things that I can do once and it's going to affect 1 million, 100 million users at one time. So that means I tend to try and say, what can I do at the nodes? What can I do that's very repeatable? That leads me towards the ISPs, to the standards, to these other things where we're more likely to put in one piece of effort and have that leveraged many times over to get us secure. Because I think stop, think, connect, and other ways of awareness, it has to get done. But and Steve had mentioned this to his comments. Trying to invent get ourselves past passwords and other things, because it's just a lot of effort to try and convince people on something they don't want.
I think you and I could do the rest of our time on defense better than offense, Jay, but we'll have to come back to that. This lady was next right here.
Thank you. My name is Jeannie Nguyen with Voice of Vietnamese Americans. Thank you for your work. I come to the point of defense and offense and would like to ask you, due to the interconnection between all the internets right now and with our increasing globalizations, FTA, all the trades and things that we very much needed to have more interconnections in data, and yet we have to mitigate the damage if there was any. So I would think that we need a strong deterrence, and if your insurance company have any products that would combine offense as defense. So anytime a virus attacks some system, they should know that they may get, they may have to pay a very high cost into their system. Do we have that technology? Do we have that products, that capability? Are we looking into it? And also the fact that due to the highly interconnected system, we need to be able to guarantee to isolate a node if that node is being infected. Do we have that products to isolate a certain node to guarantee it and stop the damage from spreading? Thank you.
Well, the insurance product is going to respond if you have liability arising out of that breach, whether it's a small piece or a big piece. And it kind of gets at Harlan's question of the role of government, because what I hear is, Jay's comment was we should regulate for transparency, not security. And the role of government can be, what protections do I have from a liability sense? If I share information with you about a vulnerability that I have or an attack that I had, how do I know that I'm protected then from, I'm not going to get a boatload of lawsuits coming at me? The other questions that we hear quite a bit about are standards of care. And there was a lot of noise around the NIST framework with this, that will that be deemed a standard of care? So for both critical infrastructure companies and non-critical infrastructure companies, even though it's a voluntary framework, is the suggestion that you really should be following this, and if there's any weakness there and there was a breach and a financial loss, then you're responsible and liable. So these are the kinds of questions that we'll have to continue to address to expand upon your question. So yeah, there is coverage available that if there's a security breach and that causes a privacy event, there's coverage for the liability, there's coverage for the defense of that, and there's first-party dollars available to help you respond with notifications, forensics, PR, credit monitoring, having the legal coach available to help you navigate the waters. So all of that already exists. And the other thing that's interesting about this insurance product is that it's not just a risk transfer mechanism. It has evolved to include a service component so that particularly for a smaller company, if you don't have those vendors already lined up, your insurance carrier can help you, implement those plans with the right vendors. So we're there to a degree, but I think these questions of standards of care and liability and protections around all of that will continue to inform how the insurance market evolves in this space.
As I indicated, I'm really very pleased to see the involvement and the maturation on the insurance side. If one compares cyber risks to, say, physical risks in an enterprise, one of the standard things, of course, is do you have a physical plant, and so you have to have fire and other property insurance, and the amount of insurance you have will be related to what your assets are. So you have to have an inventory of your assets, very basic stuff. Not yet aware that it is common practice to have a corresponding inventory of your information assets and a corresponding assessment of the risks associated with those. So in the case of Target, for example, I don't know, but the question would be how aware were they of exactly how many accounts they had, who had access to them, where they were stored, what that exposure was, and the fact that that number was growing over time meant that their exposure was growing over time. Did that affect any of their planning, any of their allocation of assets in preparation or in the event of a loss? So all of those mechanisms, I think, seem to be pretty fundamental, but are not yet standard practice going all the way up, as mentioned before, to the C-suite.
Jay?
Yeah, thank you. And you had a couple points there. First, I'll pick up on the point that we were just on. One of the reasons I like regulating for transparency is that it helps make insurance possible. One of the reasons why I think cyber insurance has gotten so much more mature isn't just great companies like Zurich, but also because the data breach notification laws that said if someone has broken into your system or if personal identifying information becomes public, you have to tell the person. And I'll tell you, at Goldman, as soon as California passed that law, we said we have one global standard now. We will not just tell Californians and not tell people in Monaco. That's not what we're about as a company, so we have one standard. And that drove a lot of data that came out. I mean, we know 700 plus million records got taken last year because of those data breach notification laws. That allowed it to be measured. The measurement allowed insurance and other kinds of risk management. So I think that's a very productive approach to allow the market to really take in. We say the market's failed, but I'm not sure we've really given market-oriented solutions a chance yet. You said, can we cut off nodes and things like that? If United States internet was as clean as the internet in Scandinavia, we would all be far better off, and not just us, but the rest of the world. Their ISPs have to tell you if you're infected. Here, it's 50-50 whether you're going to know. Comcast has been good, others haven't been as good. If you're infected and you're trying to connect to the internet, some of the ISPs will say, no, you're not allowed. You're quarantined. We will help you clean your computer, but you can't infect everybody else until you're clean. And Microsoft has done a great study that compares which countries has done this social sciences correlation to figure out how you can predict which countries are going to have the cleanest internet. And those that are generally well-governed will have the cleanest internet. And one of the other ideas that we think we can kick in here that help is a lot of the projects that governments like say, let's have more best practices. Let's agree on what new best practices would be. The industry has best practices, they're being ignored. So two in general, one's BCP 38, I forget the number of the other ones, but says you can't allow DNS spoofing. Like you have to make sure that this address that comes in is in fact a valid address. Another one of the best practices says you can't allow, technically recursive DNS. And bad guys use both of these to conduct attacks, amplify their denial of service attacks. So we think there's room, instead of coming up with new best practices, to go out to some of these existing ones. And I say police, not in the sense of people with badges, but police in the sense of going out to these people that are ignoring the best practices and hurting all of us. This is something that a non-state group with some very modest funding could do to help make all of us safer.
Want to go in the back? We've been in the front a lot. This gentleman right here with the red tie.
He's been very patient in the third row here.
I'm going to come to you next. Yes.
So a lot of your discussion has been at the C-suite and the IT level, but as Jay mentioned earlier, with the increase in digital heart pacemakers and things like that, electronic medical records have become much more of a liability, but physician groups, private practice physicians, things like that, not only lack the resources and the IT resources, they don't have the money or the practice longevity to get into the kind of cybersecurity necessary to protect patient records. So how do you begin to secure or measure risk in this field when there really is there isn't even an IT department largely to even begin to measure a lot of those questions?
Catherine, is something like that priceable when there is that little protection in place?
Yeah, and that's an excellent question. I mean, what we do find in terms of who is buying this coverage, it is the larger percentage is the companies with over $1 billion in annual turnover. So that is a challenge because also the cost of the insurance is another resource. So again, they're trying to allocate their money across different needs. And we do find challenges where somebody is wearing multiple hats. I'm the risk manager, I'm the treasurer, I'm part-time HR, I'm general counsel. So that's a very real concern. So one of the things that we see as the role of the insurance industry is that we have risk engineers who are in this space who can help provide some guidance. We participate in a platform called the eRisk Hub, and the eRisk Hub has resources that are available for somebody like that smaller or mid-sized business who lacks resources with guidelines or checklists and even calculations to say what exactly is my exposure. If I'm going to buy insurance, how much should I buy? And then the other thing is Dan alluded to earlier that we have we really rely on our broker partners, and I would be remiss if I didn't mention that because there are brokers who really specialize in this space, and they also can provide guidance on not just the insurance coverage, but what some of the best practices are. And so even if some of that has to be outsourced, we're just trying to provide a roadmap so that a company can access the right resources to make those decisions.
So somewhat related to your question, though, you mentioned healthcare. Healthcare obviously is one of the areas that there's great interest in the products. It's also an area that we as an insurer are quite involved in, as many are. What we've witnessed over the last years with the aid of technology and the aid of better systems and technology is improvements in care. Improvements in care through better use of technology. Healthcare professional liability is one of the product areas that we're involved in. We have seen the losses and the impact of losses reduce significantly with the onset of the use of the internet, use of technology, improvements in technology, right? So it's that balance, on the security side with the improvements. I get nervous when I hear people talk about, with all of the cyber risks that we have, should we even use the internet anymore? Should we use it for personal reasons or commercial reasons? I think that would be a great loss to society in general, certainly to business and commercial enterprises who I think have grown significantly and expanded greatly as a result of the internet. And healthcare is just one area.
I would also add that where we see a lot of losses, particularly in the healthcare space, is just they're not coming necessarily from something as complex as a cyber Harbor. I mean, they're coming from you didn't properly vet the vendor who's coming in to shred paper records. And this is a real claim that we saw where a temp came in as part of that team, and that individual actually had 3 criminal counts against them for identity theft, and that person was taking little photographs patient records and then shredding them. So where was the proper oversight of just the hiring practice? Who was watching them? So I guess what I'm saying is that we can talk about complex systemic issues, and that's really important, but there's also a lot that's available in terms of basic training, basic best practices.
Sir, you have been patient. You're next. Thank you. This gentleman right here in the third row. Thank you.
Yes, I'm Randall Fort with Raytheon. Jay, you've talked a lot about the complexity, and so we're on the verge, or we're actually into the Internet of Things. Gartner just had a report. By 2020, there will be 25 or so billion objects, all connected, $1.3 trillion worth of economic activity. By 2030, that may be 1 trillion devices that are interconnected. So my question is for Catherine and Dan. When you look at the future and this very dynamic technology, this isn't an office building that has so many years, this isn't a business or even a person or a boat or a car. This is something that's doubling exponentially every 18 months. And it goes from millions to billions to trillions, and we're going from megabytes to petabytes to zettabytes and numbers that are beyond human comprehension. How do you, when you're looking at risk in this very dynamic area of technology, where's the bottom? How do you get your arms around that to be able to say, yeah, we understand this enough to be able to write a policy for X amount in the exposure? But how do you begin to understand 1 trillion interconnected things going on around the world with impacts and dynamics and synergies that we can't even imagine at this point? How do you put boundaries on that in order to be able to write policies?
We're not going to issue policies unless we can actually add value. When it reminds me, of a stat I heard recently on complexity, the complexity of urbanization. Next 30 years, 50% of the world's population will not, right now 50% of the world's population lives in cities or urban areas, which are largely along coastal regions that are subject to catastrophes. Over the next 30 years, that's going to go to 70 to 80%. Right, so there's a vast movement on urbanization, vast movement to the cities that will go on globally. That will change the dynamic quite significantly on how we look at catastrophes for property and casualty. It will similarly. Your example is the growing complexity. It's a question of unwrapping it, understanding it, partnering with the right organizations so that we can fully understand it, that we can build credible products that actually do offer risk transfer or do offer services that are necessary to our customers to help them to deal with uncertainty. Because it's about uncertainty. The more certainty that we can provide, the more we have a happy customer. But we have to understand the risk. We have to uncouple it. We have to unbuckle it. We have to take its component parts and then make sure that we're providing credible products for it. Good challenges for us. Good challenges for us and our children as we're looking forward to the next decades.
Yeah, and for 20 years, most of my underwriting background is in the technology space. So it can start off looking very complicated, and I think you said it's beyond human comprehension. So that can be enough to make the tiny little mind of an underwriter just say, I don't know how to start. But what an underwriter does is we're critical thinkers, so we just break it apart and say, look at it in each element, and then where's the risk, where are the lost dollars coming from? So one of the challenges that we have in this space is we don't know where the lost dollars are coming from. There's not robust actuarial data that exists that says, okay, we have 100 years of safety data, 100 years of floodplain information. We don't have that. We see some lost dollars coming in from how to mitigate a privacy event, but these lawsuits are still pending. The plaintiff's bar is continually asserting new theories of liability, but we haven't really seen the outcomes of that. So, and then never mind taking it to the next step, which is I think what you're alluding to, which is the Internet of Things that, what happens if, I think Jay mentioned the example of, malware gets into the system of a vehicle and it drives off a cliff. I mean, so how do I value that from an insurance standpoint? So think, Mike Kerner is an actuary. Actually, that's his background. So, how would an actuary put his or her hat on to figure out how to price for it? What kind of limits do I put out? So this is actually a topic that we talked about last week with DHS is, can government play a role in gathering the data of losses or events, just to see what are the trends, where are the losses happening? So this Internet of Things, like we think about scenarios, but what's actually happening? And then what are the related costs to that? And then with that information, I think our actuaries would happily start modeling. But that's, we're really at a very basic level of trying to understand that, which makes it exciting. But
Steve, I want to ask you about some of the numbers that were involved in that question. What should my policy friends like Jay and our insurance friends like Zurich be thinking about when looking at the possibility of risk among an Internet of Things that has 1 trillion devices on it in 20 years?
Trillion's a nice big number, isn't it? I haven't thought very hard about the Internet of Things, but let me to a principle. One of the things I mentioned fire insurance as a baseline, just to have a discussion. One of the things that is common to prepare for and anticipate possible fire is to have fire drills. So it's annoying. Every once in a while, somebody pulls the alarm and it says, okay, you got to go leave the building and so forth. We have not done anything like that in cyberspace. So just imagine that we said, okay, we're going to institute the equivalent of fire drills, which means we're going to have controlled outages, for example, or other similar kinds of disruptions for the purpose of testing to see how resilient our systems are. For example, if there's a common mode failure where it turns out everybody's outsourcing to the same place, better to find that out sooner rather than later. So there's a thought for what one might do and change the ethic a little bit to try to make the systems a bit more resilient. If you build something like that into the thinking, into the design, and into the practice, then as you scale up into this trillion-fold Internet of Things, you can anticipate how many common mode failures you're going to have versus whether or not the pieces are going to separate into self-sustaining, pieces that would continue even if there were some disconnects in the system.
Steve, I think some companies we're aware of that we're engaged with are using such things as red teams to use to really test their systems, to try to penetrate their systems. It's kind of part of their scenario planning, which I think is related to what Steve was getting at.
And in the report, I look at cyber issues today and I say, boy, they're bad, but they're not that bad. When we did the history, we couldn't find anybody that had died from a cyber attack. So I mean, yes, things are bad. But what really gets us in this question, Randy, and the previous question, one reason cyber attacks haven't been that bad so far is that they're only attacking things made of silicon, things made of 1 and 0s, which are easy to take down, but they're difficult to keep down over time. Right? I mean, you're writing a paper, the computer eats it, that stinks. You have to go rewrite it. someone erases your hard drive, that's okay. Hopefully you've got a backup. You can slap it in. You can be back to where you were. The more that we're doing the things that these last two questions were about, Internet of Things, embedded medical devices, smart grid, now cyber attacks and failures bring down not just things made of 1 and zeros, but things made of concrete and steel. And we are going to be in a very difficult place. That's why we don't want the message of the report to be the internet is falling. We want the message to be when we connect the internet to things, when you have things like Heartbleed, increasingly it's not just going to be passwords, it's real stuff we really depend on, stuff that lives depend on, because we're doing this Internet of Things. And that's one of the things we really want to get out in this report. If you think the problem is the internet is going to be off like a light switch, then you might be missing the real issue of being tightly coupled with the internet into our real lives.
We have time for one more, and we're going to go to this gentleman in the back that thought I shot him down earlier.
It's all good. Chris Castelli with Inside Cybersecurity. We've heard some different points today about how C-suites are doing. It was said that they're taking the issue more seriously. It's also been pointed out in the surveys there's a lot of false confidence out there. How do you assess that? Is it simply anecdotal, or are there metrics? And if you had to give a grade to the C-suites in various sectors right now, what sort of grade would you give them?
Want to go there, Dan?
Sure. So we do some surveying within Zurich. We work within industry partners, insurance industry, a group called Advise, and we've recently completed some surveys. And what we've seen is we've been able to witness this increasing level of awareness among the C-suite. There's also an increasing level of awareness of the product areas that Catherine was talking about. We do know in terms of risk analysis and how companies are looking at risk and emerging risks that the risk of cyber events is continuing to rise. Now it's recognized by about 90% of the larger companies as a potential high to very high risk. So that's something that's coming out of the survey data, and we've been looking at the survey data. Just those that are buying cyber risk coverage has risen. I think it's about 52% of the companies that we recently surveyed. That's up from mid-30s when I first met Catherine about 4 years ago. So it keeps going up. So she's doing a great job of selling the product, but it's actually the awareness and really the interest is certainly continuing to increase. I do think it does speak to this reputational issue, right? So the reputational risk is big. We've seen that with recent issues that are out there. So if, that's getting the attention. I mean, I talked to a CEO recently who said, I don't want to be in front of Congress like that other executive was recently. So that's the nightmare scenario for a lot of C-suite is to come to Washington, right? And to be in front of Congress. Who would have thought that? But I think that's, increasing the awareness. I mean, I think it's just, it will continue to go higher. Those that are interested in the coverage and really the services that can be procured to help and the emerging industry in terms of the scenario planning that we were talking about, those that are involved in that, I think will continue to see strong demand for their services. But it's definitely got the attention, which I think is a good thing. Any time when you can create that level of awareness, I think it's a good thing. I think it helps to be more resilient. It helps to better plan for a lot. We see it on catastrophes that I was talking about earlier. Those companies that were better prepared fared much better due to Superstorm Sandy. Those companies that are better prepared to manage through cyber risk will fare much better than those that neglect it or defer it only to their IT department. And I still do hear those comments as well. I sleep better because I know my CIO or I know the IT department has it down. That's where this is evolving. I think that opinion will change over time, and I do see more CEOs, CFOs who are much more in tune to the risks that are there.
I think it varies by industry segment as well. So, the financial institutions, healthcare, technology, they tend to be very clued into these issues. They're highly regulated in a lot of cases. So there's more awareness there than, for example, higher education, which comes from an ethos of let's share information. So they just there's different mindsets depending on industry. And then the Advisen survey that Dan referenced did show us that the small and mid-sized companies, so less than $1 billion in revenue, there still is maybe a disconnect there, which I think we referenced earlier with this gentleman's question.
We're almost out of time, and thank you for the terrific questions from the audience. Made my job a lot easier. Jay, I'm going to start our wrap-up with you, and I'm going to torture you by telling you that we only have about 30 seconds to a minute to share your takeaway, your final thought, a note that you made that you didn't get a chance to share yet. Please start us off.
Great. Thanks. United States government is starting to do a little bit better on this. We've actually had great conversations with the British government, who I think is a little bit farther along in a lot of these areas in picking this up. The internet's the coolest technology for the last 600 years, the most transformative thing since Gutenberg. Electricity is pretty good too, so let's call it top 2 or 3. And our concerns is that it might not be if we are not getting this right. The offense has had the advantage over the defense for decades. And how long can you have a system where one side has an advantage decade after decade before it hits a tipping point, where there's more predators than prey? So we really want to help make sure that we get this right. Thank you.
Dan Reardon of Zurich, wrap us up, please.
So, I mentioned, and Mike Kerner mentioned it as well at Zurich, our mission really is to help our customers better understand and protect themselves from risk. I will say this issue of cyber is paramount with many of our customers. Our collaboration with the Atlantic Council is helping us, I think, to help them to better prepare and help them to better understand risk so that we can protect them. So I'm excited to be here, excited about the dialogue. Thanks, Francis.
Catherine Mulligan.
Yeah, thank you. I would just continue to urge companies to think along the lines of moving from protection to resilience. And that means bringing all the stakeholders around the table. So boards of directors, C-suites, risk managers, and chief information security officers create a dialogue internally so that culture of awareness can be fostered.
Thank you. I like very much the raising the awareness of the complexity, the layers, and the aggregation, the risks of aggregation, and in terms of raising the awareness to focus attention on peering through the different layers. So you can see so understand where the correlated failures might be. So common use of a single cloud supplier is a typical example, but it's not the only one. I think infusing that thought in all of the analytic processes up and down the hierarchy, from the highest levels all the way down to individual analysts, I think is an extremely important thought that will carry us through as the internet explodes from its modest small scale today to a really large system in the future.
I want to thank all of you for your wonderful participation. It's been a terrific conversation. Thank you very much for participating. Thank you all for coming. Some special thanks I want to say to the Atlantic Council and to Jay, especially for the invitation, and to my friend Barry Pavel. Thank you all for coming today.